Welcome to KTM Investing. Today we are going to give you an update on NIO and Citigroup's decision to change their stance and price prediction on the stock for 2025. There are also price predictions by the most bullish analysts for NIO to hit $900 per share by 2035. And before you start doubting NIO, dubbed the Tesla of China, remember, you could have gotten Tesla shares below $4 per share in 2010. Tesla has increased 22,000% since then. And given NIO's current trajectory, it is not far-fetched to see how they could achieve a 21,000% increase over the next 10 years. By the way, if you're already subscribed to our channel, we appreciate your support. If you haven't yet subscribed, please go ahead and smash that subscribe button and join our journey. Now let's move on. NIO Incorporated, trading on the New York Stock Exchange under the symbol NIO, closed at $4.24 on April 29, 2025. This marks a 1.62% decrease for the day. But if we take a step back, NIO has actually outperformed the major U.S. indices over the past month. The stock is up an impressive 13.12% during this period. This really stands out, especially since the S&P 500, the Dow, and the Nasdaq all posted losses. Part of NIO's recent strength comes from a positive reaction to news out of Auto Shanghai 2025, which sparked a 7.1% surge on April 28. Some investors are even calling this the Shanghai bump. NIO's recent performance puts it in a strong position compared to its peers. Companies like Zeekr, Li Auto, and Pony AI have also seen gains since Auto Shanghai 2025, but NIO's growth is outpacing most of them. This kind of performance suggests there's a company-specific catalyst at work. Investors seem pretty optimistic about NIO's future prospects. Analyst sentiment toward NIO is becoming increasingly bullish. Around half of the analysts covering the stock now recommend a buy rating. The mean price target is $5.08, which represents a 33% upside from the current price. The most optimistic target even goes as high as $8.06. Citigroup analyst Jeff Chung recently reiterated his buy rating on NIO, and he bumped up his price target to an impressive $8.10, which means if you invested in NIO today, going with his estimate, you would almost double your return. Chung's bullish outlook is based on a few key factors. He points to NIO's strong product pipeline and ambitious delivery targets. He's also highlighting the company's technological advancements in areas like battery swapping and autonomous driving. All of these factors add up to a positive outlook for NIO's future earnings and market share growth. NIO's financial performance is expected to improve quite a bit. Analysts are projecting a second quarter 2025 earnings per share of negative 22 cents. While that's still a loss, it actually represents a 38.89% improvement year over year. Revenue for the second quarter of 2025 is forecast to hit $1.71 billion, which is a substantial 24.51% increase from the previous year. Looking further ahead to the full year 2025, analysts are predicting even stronger growth. Earnings per share are projected to reach negative $1.13, a 25.17% improvement year over year. Revenue is expected to surge to $13.74 billion, marking a remarkable 50.41% increase. These projections really highlight the positive trajectory of NIO's business. Continued growth in both deliveries and revenue is going to be crucial for the company as it works toward achieving profitability. NIO has set ambitious delivery targets aiming to capitalize on the rapidly growing electric vehicle market. For the second quarter of 2025, the company aims to deliver 63,000 units. This represents a 50% quarter-over-quarter increase from the first quarter's 42,000 units. Looking further ahead, NIO has even bolder aspirations. The company believes it can achieve deliveries of 150,000 units in the fourth quarter of 2025. This momentum is expected to continue into 2026, with Citigroup upgrading their full-year delivery forecast. They now project NIO to deliver 600,000 units, up from their previous estimate of 456,000. Achieving these targets would position NIO as a dominant player in the global EV market. NIO's ambitious delivery targets are supported by an aggressive product pipeline. The company plans to launch 10 new models before the end of 2025. This includes highly anticipated models like the 5 Series and 6 Series. These models will leverage platform cost efficiencies, leading to improved margins. NIO is also expanding its product portfolio to target a wider range of customers. This includes the launch of the third-generation ES8, its flagship SUV. Additionally, NIO has introduced new mass-market brands like Onvo and Firefly. This strategic expansion aims to solidify NIO's position in both the premium and mass-market segments. NIO is heavily investing in technological advancements to gain a competitive edge. The company recently announced a strategic partnership with CATL, a leading battery manufacturer. This partnership focuses on expanding NIO's battery swapping infrastructure, and NIO aims to have 4,000 battery swap stations globally by the end of 2025. This includes 1,000 stations outside of China, demonstrating NIO's global ambitions. In another significant development, NIO has developed its own advanced driver assistance system chip, and this in-house chip is expected to replace the currently used NVIDIA chip. The move is projected to save NIO approximately 10,000 RMB per vehicle, which is approximately $1,375 per vehicle. These cost savings are crucial for improving NIO's profitability. Analysts forecast a margin recovery for NIO, with margins reaching 13% in the second quarter of 2025. This is expected to further improve to 18 to 20% by the fourth quarter of 2025, driven by increased deliveries and cost optimization measures. This has been a NIO update from KTM Investing. Thank you for sticking with us, and don't forget to like and subscribe to our channel, and we will see you in the next video.